Hey, what's up, Gamma Chad? How's it going, man? Hey, Oliveros. Wally Waspers. Very interesting name. PCMD. Day Swag is here. Hello, hello. Ew. Whereden's work. We have multiple people with WW in their name. Hey, what's up, Tom? That's very interesting. None at all, huh? Yeah. Yeah, something's brewing, right? We got that very interesting we got that very interesting move on Ultimator's bottom finder there. We got I would say, if you go back a little much, it might get a little inconsistent. But recently it's a nice thing to add to the mix. It tracks different things than everything else that we have tracked, so it can add that to the mix. I think last time we looked at Richard's sheet, just before he stepped away, one of his last updates there is basically like, also kind of saying within the next, we start to see a bit of movement. Like, again, we probably got to wait like a week to 7 trading days, something like that. But we got that. We have his little legacy bit there. We're seeing a little bit of this from Ultimator. Stuff going weird with the ETFs. GMU off reg show today, but XRT I think is still on it. I think GME proper liquidity is coming down. Let's go take a look. Last time I checked. Yeah, it is. It was very low today compared to what we've seen recently, right? I mean, I would not say 3.9 million is low in general, lending liquidity, that is. But keep in mind, right, up to the second convertible bond offering, the highest we saw ever was like 5 point something million. And then after the convertible bond offering, it shot up to 10 million on Interactive Brokers. So now it's down to 3.9 from 10, which is, I don't know exactly what it means, but interesting thing to add to the mix. Ivy is starting to do some things. If I'm not mistaken, we ended up on the week. In fact, I think we reached a local high. Yeah. So Ivy Composite right now is the highest that we have seen since the convertible bond offering. I know that's not saying much based on what we've seen since the convertible bond offering, but composite IV across all of our strikes is at the highest we've seen, which is to say 70 cent. Wow, it really ticked up into the close. 77%. Oh, we had this strange step up today in IV. Let's take a look. Oh, what is this? Oops, forgot to close that order. Oh well. Let's see. What can I share here? So here we've got our composite IV here in the bottom. It's nice. It's easier to visualize once we go ahead and make it really big. But right, so we've got we kind of hang out here. We had this one yesterday, this weird step up and then down. Don't know exactly what this is. But then midday today. Now, keep in mind, this is after the whole Powell thing. So we went up, we went to 33, and then we hung out. And then liquidity absolutely dried up. You know, I still, I play around swinging, day trading some, mostly just cover calls, but day trading those. And we could not get, like, basically by like 1 o'clock or 1:30, like, spreads were super tight, very difficult to round trip anything meaningful. Fills very difficult. And price action obviously just kind of nowhere, right? But nonetheless, we had this huge shoot up in our composite IV. So very, very curious exactly what's going on there. Followed by a high on the day in IV going into the close for whatever reason. Unless we are starting to see some of that internalized IV volatility start to make its way back, right? Are they going to start moving up values ahead of earnings here, maybe even a little bit more? See, what I would presume, because we're still a little bit out, maybe they did this to kind of get one more sort of hurrah going into the weekend. So, like, basically, right, what was very interesting is options prices, for the most part, which is very unusual for a Friday, they did not change really at all. Closer to the money stuff did, but out of the money stuff did not really. So, like, the 25s for September 5th didn't really change that much. Nothing out at like September 12th or September OPEX, where the IV is starting to notably move up. What do we have here? Look at the chain. Yeah, so see this where we've got these two weeks here, still pretty low IV. So this week is null. 29th. Next week is very low. The following week, also very low. But as soon as we get to earnings week, we shoot up to 75. And then September OPEX, we shoot up. Do I have that right? Yeah. September OPEX, we shoot up to 77%. And then our later stuff isn't quite as low, except April's are very, very low. Yeah, that's strange. April's are very, very low. But by and large, right, what this rising IV here means is that overall, as IV is being taken off the board, right, as options contracts are coming off the board, that the composite value of all of our IV across all of our strikes is increasing in value. So that really stepped up today for some reason. I don't particularly know why. But yeah, that's what's going on there. I would guess my assumption is that they'll let some of this out on Monday and Tuesday, like they did this week. Most of the loss, very interestingly, most of the loss on our options came on Monday and Thursday this week. So, like, we had a lot of value taken out of options going from Friday into Monday. Monday, right, within the first 3 hours of trading, I mean, like, stuff got crushed. Then Tuesday and Wednesday, we didn't see a lot of change. Then Thursday, values got crushed. But then today, there wasn't really that much change relative to prices yesterday, despite the fact that we were going into, a Friday. So did they price in? That's the question, right? Did they price in the weekend on Thursday? Or did they not price in the weekend yet? Or did they price it in, but then they obscured it with this IV pump today while the price was going sideways? Very curious. Very curious. Very, very curious. Let me get back to my tabs here. Yeah. Let's look at our comments. Tomer keeps asking this, man. I think you asked this question last week, man, right? I have $25 calls for how cooked do you think I am? For an average price for October. Look, I'm not a magician. I'll echo what I said last week. Your break-even price on October 17th is what are the price of these now? $164. That's not terrible. Gonna lose like another I'm back. You're probably gonna lose like another 20-ish cents probably on that. Like I because what I think is gonna happen, right? I think over the next week we're probably still not gonna see too much. And so I wouldn't be surprised if another like 20 cents came out of those contracts if you're holding them. I think probably going into the week of the 5th, we'll see some activity. Going into earnings, we'll see some activity. Coming out of earnings, I have a hard time thinking they're going to crush it out of earnings. There's not really anywhere to go. At least from here, there isn't anywhere to crush it. And I think we are going to get an EPS beat, which should mean a price up and a return of a little bit of volatility. Now, I think the real move, the really volatile move is going to be whether they choose to de-internalize volatility, they choose to go ahead and settle some obligations with respect to whatever is going on with interest rates. If we get interest rate on the 17th, then those options could get priced up decently. Would I bet that those are necessarily going in the money by, well, they're $25 calls, so they could be in the money. They could close out the October OPEX period close to the money or near the money, but are they going to be $2.87 in the money? I don't know. I think probably the best, if it were me and I were holding these, I'd probably be looking at like, I don't know. It depends. I guess it would depend how big of a position it would be in my portfolio. But maybe I'd do it as an earnings play or an interest rate play, and then just kind of if that doesn't play out well, just be like, all right, whatever it is at that point, just kind of cut them. But that's me. You gotta make your own decisions. You gotta figure this out. You gotta, I guess, look through you have to assess your risks. You have to assess what that position is to your portfolio, what that means to your portfolio, what that means to your trading strategy in general. I don't know what like your meta game is. Your meta game for trading is probably different than my meta game for trading, right? I think I've talked about this before. like the way that you end up profitable in the long haul as a trader, is one, you're not trying to like do every play like, this is the one where like before I had this much money, but then after it I'll have this much money, so I'll take the trade, right? Like, don't trade like that. That's how you, like, you'll get lucky a couple of times in a row, and then it won't work out, and then you'll be like, no, I just need to make the if I do this, then I'll have, right, it doesn't go well. But I don't know what your meta game is, right? The best traders have a meta game that they're always playing, and they have those rules of the meta game that they're happy to keep because they have a sort of confidence in their meta game. They know, like, okay, if literally all I have to do is just hit my targets with my metagame and make these different decisions in my own metagame, independent of what's going on, what the options market wants me to play or something like that, right? As long as I'm doing my metagame and I'm hitting my benchmarks, then I know that I'm going to be profitable. So I don't know what your metagame is. I don't know what your targets is. Like, I don't know if you're doing risk in terms of R or something like that. I'm not sure. But to say whether you're cooked, I mean, like I said in the past, I do not particularly like to trade and hold long calls for an extended period of time. I don't like to do that. I've done that maybe 3 times over the past year, 4 maybe ish. I don't do it a lot. And when I do, I go in the money. I don't go out of the money. So that's different approach there. So I don't spend too much time thinking about those types of bets. Interesting. What do you mean by exculpate? How does one exculpate a Bollinger Band? Interested to hear what you think about that, Clint. Interesting follow-up question. Couple weeks we'll probably see some volatility. Look, the other thing too is, it's important to consider with this stuff, right? Going forward, there's always going to be a new normal. Okay. As the stock changes, right? Like, as the company changes, as different things occur, right? What's considered normal is going to differ. Now, there's big stuff, right? There's big multi-year cycle stuff, like this thing. These are big, like, multi-year cycle things. Maybe we get another one in, I was thinking about this the other day, thinking about Roaring Kitty's live stream in June. Maybe we get another one of these in 2027, like he hinted at. But like this, if you consider this normal, yes, this is normal, but this is every 3.5 years normal or something like that, right? December 2027. I don't know. Remember, from January 21 until 2024, this was normal, going down for a long time, and then periodically having a downward moving floor with these types of high cyclical, high volatility activity, right? Okay, that was normal for 3 years, 3.5. Then we got a new one of these, which was a different kind of normal, and this became different, right? Then we got this. Now, instead of having a falling floor with these volatility cycles, we've had 1, 2, 3 of these with a rising floor. Okay, right? So you can kind of see them here. Here's 1, 2, 3, 4, 5. Little guy there, right? 6, 7, 8, a little bit more, right? 9, little one there, 10, down, 11, 12, 13. Actually, what we're in looks a lot like 2023, right? 1, 2, 3. Look, this thing looks very similar to this period in 2023. And then down, 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 down. Then we get one toward the end of the year, and then down, 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 down. One little one around March earnings, and then down, and then big mother of all jumps here. Sneeze 2.0 with its double crown there, right? Double top. And then we get probably what was like the actual, like, the actual thing of this this cycle was probably July, right? So this was a May to July, mid-July cycle. Maybe we would have gone. Where are we gonna go? No, I mean, this was April to June. We figured this was gonna end kind of early June, and it did. So yeah, we are kind of just about due for another one of these, right? We had a July, like sort of mid-July to mid-August, mid-August to mid-September, mid-September to mid-October kind of fallow period in the stock last year. So here we did mid-June to mid-July, mid-July to mid-August. It seems like we're going to get, we might get a little bit of volatility on the tail end, or this can be punctuated by some of this earnings volatility. But I would say that, this is going to take us maybe to like September OPEX. And then we get the start of our next cycle coming out of September OPEX. And oh, wouldn't you know, just 2 days before September OPEX, we have this FOMC meeting where it is highly, highly anticipated that there will be a major rate cut. Although there's uncertainty about that. There's always uncertainty about that, right? So, that's kind of normal, right? We get, Richard used to talk about this all the time, guys, right? 2 months up, 3 months down. That's kind of how it goes. Right? Sort of May, June, like sort of early May, mid-May to mid-July, and then down 3 months. And then November, December, and then January, February, March down. And then April, May up, and then we kind of stay up a little bit in early June, and then down. And then June to July, July to August, and then we'll have another month, July to September, and then we go back up again, and then we'll do October, November, and then maybe start to come down again in December. But it'll be a question of what happens with the company sort of going into December earnings. If we're up, if we're high, if we're trading in the 30s again, maybe we get another convertible bond offering, comes down. We spend January, February, March flat, and then huge Q4 earnings, and April OPEX gets absolutely destroyed, right? That would be very cool if we saw that. But that's basically, I'm just ballparking stuff here, right? This is like, you just see what happens. The key to this stuff is find the transition points, right? Try to anticipate the transition points. Don't get stuck when we mode shift, right? Like if we're going from flat, 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 right? And you're just like, oh, let's hammer the covered calls at $23 or whatever. Just don't get caught when we phase shift. And a good way to check for that is to look at what the options look like going into the next couple of weeks. And that's what we were talking about earlier today. That's at least what I was talking about earlier today, right? And what we can do, and you guys can use this, right? I mean, I talk about this, like I walk through this, hopefully reaching new people as I do so. But if you look at individual weeks in terms of gamma exposure, you can see, like, you can anticipate and you can see how stuff is forming up. Obviously, it can change. But if we look at next week, this is the thing that continues to stick out for me. $23 is still our call wall going into next week. That can change. We can get some volatility, right? That kind of extends some of this, and maybe we get, we move above 23 or something like that. I don't know. And then we kind of do the same thing where we kind of trade between 23, 24, and then slip back down again. But 23 is our largest call gamma strike next week. Net call gamma streak by a wide margin. I think that we're probably going to end up respecting that one more week. But then the 5th, right, as I pointed out in the video earlier today, 25 starts to take over. 12th, 25 takes over. 19th, 25 definitely taking over. So In September 5th, 12th, 19th, this is a signal to me that we might start moving up, because the way that Gamma is structured is there's nothing in place that's incentivizing the market maker to want to keep us below, say, this 23 strike. There are strong incentives. There were strong incentives this week, and there are strong incentives next week for the options market maker to want to take interventive measures, whether it be by their hedging or trying to lend shares to do things to adjust the price, if this is possible, to keep the price below that, mark. Those incentives go away after next week. So things get a little freer after the 29th, is what I would say. That is kind of my general outlook there. And you can do this too, right? If you have a subscription to Unusual Whales or some site that provides you gamma data, you can look at this, right? And the rule of thumb is look at where the highest positions of call gamma exposure are. Understand that the movement of the price 98% of the time is, maybe even 99% of the time, is under the control of market makers, brokerages, whatever. It's under control. The price is under control by market makers. Okay. It is a rare event where there is a loss of control. And when there is a loss of control, they have tools to be able to bring things back under control, because their profit model involves, right, profiting off the bid-ask spread, just cycling trades, just cycling volume through the bid-ask spread. That's what they do, right? That's how they make their money. So they want to keep the price controlled, because it is harder to do that. It is harder to profit the more volatility there is necessarily, or what they will do in order to make sure, because they'll price options accordingly. If there is more volatility, they'll price their options accordingly. But when there's volatility, volatility can attract, let's say, irrational actors to, as has happened in the past with GameStop and other, quote unquote meme stocks. Although I'm not sure to what extent that's really driven by retail options action. One phase of the sneeze was driven by some complications with retail options behavior. But really most of that, I think, was still institutional related stuff. What was I saying? Bid-ask spread stuff. Volatility in general, right? They'll increase the premiums on stuff, and they'll do kind of broad stroke volatility cycling in order to profit. But really, you like not crazy volatile options, because it's a lot easier to just cycle trades that way. Anyway, gamma exposure. Take a look. Use it for your own forecasting. You can too. Let's see what Game Chat has here. I usually sell and buy back my CCs in lots of 10. This is the first week I had some partially fill and not completed. Options liquidity is dusty. Yeah, man, it was a little rough. I would say, where did our liquidity peak this week? It was like Wednesday. Wednesday was very liquid. Wednesday there was a lot of activity, or at least it was easy. This is what I wonder, is like, because sometimes the liquidity doesn't correspond to an uptick in volume. And so I wonder sometimes, like, does the increased liquidity correspond to, like, somebody needs to, like, hack out of a position? So, like, this is the thing I've been thinking about, especially with, like, the experience last Friday too. I was, spending some time looking at this too, like what high frequency traders, like, can do, right? So, like, there are allowances, how all this works to, permit high frequency trading algorithms to come in and do their thing with small orders and do it very rapidly and things like this. And but algorithms do dumb stuff sometimes, right? Because they're not human. They don't know context. Like, they do what you tell them to do, and teach them to do, but they won't do what you don't explicitly teach them to do. And so, like, part of what high frequency traders, like the guys who actually, like, babysit the algorithms, like, a lot of what they do is they'll watch them and be like, oh, it's doing something dumb. Stop. Okay. Have to get out of this position. And part of the agreement with, say, these firms, as far as I understand it, and say, market makers or brokerages, this whole like trifecta of how all this works is, the liquidity is there. The agreement for the liquidity provision is there so that these guys who are going and doing it, these firms that are doing high frequency strategies, or they're doing algorithmic trading or something like that, that they can get out of stuff. Like they can fix their mistakes. If something goes wrong, they can manually hack their way out of a position by sort of controlling, saying like, all right, let's put in these orders. Please provide me with liquidity. And the system, which is designed to provide liquidity and sort of delay settlement, and also, hit multiple brokerages with orders at the same time, right? Hit multiple exchanges to get the best fills. Schwab, for example, which is my brokerage, like somehow is able to get price improvement over 96% of all of their trades, fill at better than the NBBO, which is the National Best Bid Offer, which is what you see on the quote. Interestingly, 96% of their trades beat that. I don't know how that happens, right? But anyway, I sometimes wonder the degree to which liquidity is actually based on, somebody needs to position or reposition or something like that, or did reposition. And let's say, a market maker or a major firm or something picked up a bunch of contracts, and they just need to move it, right? They just need to move these contracts. They need to move these shares. It just needs to get off their books. And so they're fine if they, if they lose a couple cents here, there at the bid ask, and you can just, you can run that while they're unloading. Because then other days you come in, you try to do it, and the spread will shift pretty aggressively so that you can't do that. You can't just set up shop and click, but dusty is a way to put it. Today was certainly very dusty. Yeah. That's very interesting. I certainly don't know, but money would be cool. I haven't done a full earnings rundown yet. Hey, Johnny, thanks so much, man. I appreciate that. Thank you. Hey, two. Yeah, that's right. Isn't that where end of September, start of October is where Richard put his last Babe Ruth graphic? Yeah. Yeah. Part of that too, like the fact that on Richard's models and stuff, like GME was set to do that type of stuff, and like that comes right after like this whole thing, right? Like they plan this stuff to all come together, right? That's my hunch. Part of the thing with like earnings too, why does stuff happen around earnings? Why does stuff happen around like FOMC stuff, for stuff that doesn't necessarily seem that closely related? They plan to do these adjustments, or they plan to go ahead and do settlement stuff around events where they know people are going to be watching the stock or watching the markets or something like that, right? So the fact that does layer up pretty nicely with a possible rate cut is interesting to consider. What is my view on the potential of a bond offer reoccurring? I would put it at non-zero to start. Ryan Cohen was pretty good last year at telling us when he wasn't going to do an offering. So if you remember in quarter 3, he came right out and said no, or this would have been Q4 report. So in quarter 4, the quarter 3 report, he said not doing an offering. We don't intend to do one for the remainder of the fiscal year. So he was pretty good about telegraphing that. That was a nice service because it meant that we got to enjoy the rest of December and and the beginning of January. He said, obviously, he said nothing of the sort in March and nothing of the sort in June. But he did wait a whole trading day before then going ahead and doing the convertible bond offering. What I would take from that is that Ryan Cohen, I would expect, because this in part, right, as shareholders, it seems to me that this is one way that Ryan Cohen is attempting to communicate as clearly as possible with his shareholders, is that if earnings comes and we do not explicitly hear that they will not offer, my guess is that during the following trading day, there will be an opportunity to enter into a short volatility position or something of the sort, after which there'll be some form of offering. Now, this time around, it might not be a convertible bond offering. It may be senior notes. It may be an at the market, right? So you'll recall that the convertible bond offerings, both of them together, came to equate to an exact one-to-one matchup with the amount of cash that the company had on hand. So there's something to that, I think, where even though there isn't like an obligation that if the company were to go bankrupt, the note holders would get paid out with the cash, there is a sort of like, okay, well, the thing about these notes is, and probably why they're 0% is like the cash is there. Like if something does happen, whatever it is, if something does happen, like the cash is there. The notes can be paid back, not only with the cash that gets invested, but like, there's it's one-to-one. There's a whole other pile of cash that could pay out every dollar if every dollar was lost. It's an extreme case, but it's there nonetheless. The question is, does the company go ahead and raise more cash rather than do more notes and leverage the cash they already have by doing another notes offering? I don't know. But I would say the key thing would be wait till earnings. Ryan Cohen has did he announce, I'm trying to think. The Q3 earnings offering, I think, was immediate. Maybe the following day. It was very perplexing. But then it resolved right the following week, because then we got a rate cut and all the shares got bought up. And we went right back to where we were prior to earnings, interestingly. I think if he's going to do another note thing, he'll give it a full trading day, and then after hours, as he did, he'll go ahead and make the announcement. So, but if he's not going to do one, then he'll probably say they're not going to do one during the quarterly earnings report, is my guess. That's my guess. He could throw a curveball. That would kind of suck, but he's going to do what he thinks is best for the company, ultimately. There has not been an official date announced, but it has regularly been the second Tuesday of the month for quarters 1, 2, and 3, and the fourth Tuesday of the month for quarter 4. So for whatever reason, no matter what quarter it is, the media, whatever platform, can't figure out where that actually goes. Let's see what Schwab has right now. They might finally have their stuff together, because now we like GameStop. Schwab's got it estimated correctly now on the 9th. That's the estimation. So that's when I'm expecting is the 9th. And the market is too, right? Because of IV. Right? IV, for example, I think like TradingView has it set as the 3rd. Oh, I guess IV is IV up for the 5th too? No, it's not. So IV is not there. The options market does not have earnings priced in for September 5th. Does not. Despite the fact that our call wall moves up for the 5th. Does not have that priced in. So they do not think earnings is going to happen that week. Cheers, Timer. Of course, man. What's up, Sharon? So appreciate the thoughtful presentation this week and carrying on the tradition. Yeah. Sorry, I missed very beginning. Did you say beginning of week? Price range. At the beginning of the week, I think I mentioned we would have a chance earlier in the week to go into the 23, 24 range, but then probably we'd end up, similar to a max pain finish. But we ended up a little higher, which is nice, right? Close to 22.89. Yeah. That was more or less my projection. Probably something like next week. Hey, what's up, album? Rising floor, falling ceiling. I don't know if it's going to be a falling ceiling. I think it's probably both rising. It just depends where you just have to look between cycles. Our most recent 2 cycles have been rising, right? If you want to include July, right? Because like the May, June stuff was a little. I'm not sure if you can count that because that's a 3.5-year event. That's not a regular cyclical event, right? Because there are like multiple cycles. Like you have cycles within cycles that kind of stack on each other, and like there's some sort of 3.5-year, it seems, cyclical event, which happened in 2021 and happened in 2024 and a half. So that's a different type of cycle. The smaller term cycles, the 2 months up, 3 months down cycle, those have had higher ceilings. So rising floor and rising ceiling. So let's see if we bump out to our chart here. So make this bigger. Yeah. So right, our minimum in August was like 1850, I think was our low. 1873, coming off of the summer, right? Coming off of the Roaring Kitty stuff. Then it was 1930, I think, post Q2 earnings. Then we got the second offering completed. We went up for a bit. Then prior to Cat Day, I want to say it was like 2030. And then we went all the way up, all the way down. And then the low following the bond offering was right here at the 500-day moving average. You can see how important this is for us. The 500-day moving average is roughly around what 2x cash is for the company. Right now, anyway. So yeah, we've got down to what, like 2073 was our low back here. 2073, 2078, double bottomed. Then here it was 2154. Then over here, 2192, which was right around, that's right around 2x cash. So there's going to be more cash on the books regardless because it's going to be a profitable quarter. So I think this is probably going to be enough to take us over 22 as a minimum. So even if we do get an offering, I sincerely doubt we see a price following the offering below 22. The lowest maybe we go, well, we could get one last hurrah for like 2190 something, but maybe not, right? So if we look at our highs in that period, if you want to think about like, okay, what was a natural high maybe coming off of the Roaring Kitty stuff, it was just below 30, 29.91 or something. Maybe pre-market. 29.79 intraday, 29.91, I think, pre-market. But then our next high was 34.40 intraday. And then next high, Bitcoin thing, intraday, 35.78. Obviously, pre-market, it was in the 37s. So, no, they go up, right? I mean, they shift up just a little bit. Rising floor, rising ceiling. Rising floor, rising ceiling. Rising floor, right? Now we didn't even go down. We didn't even go touch the 500-day moving average. So, do we go higher this time? Don't know. But we'll go somewhere. We'll go somewhere. Do I think my take on RK? Do I think he's out for the foreseeable future? I don't know. I've thought about this. I don't think he's done with. I don't think he's done with GameStop. It's tough to know exactly what his aim is. I think he's certainly interested in making a public appearance or showing himself publicly when it's advantageous for what he's trying to achieve. And I have a sense that he's aiming, or his aims are much more market reform oriented than certainly the media would like to convey. And it strikes me that his aim to make as much money as he has made and make more money in the future is because he wants to demonstrate that the game is broken, that it's too controlled, and that control is too exploitable, that the perceived impossibility of such an exploit coming to manifest is solely the product of opacity and a sort of Byzantine administration, and through a kind of closely guarded, man in the high castle type thing. But that it is exploitable, and that he knows it's exploitable and knows how it's exploitable, has found some edge, knows something that's not even, I guess, maybe 100% clear to the rest of us. I mean, the guy clearly knew some things back in 2019, right? That Roaring Kitty tracker is no joke. That guy knows his stuff. I certainly think, like, for him to give the impression that he's no longer, right, that he's stepped away, is advantageous, right? I think in 2024, people were very interested in trying to find him places, and were on the hunt to try to track him and see what he was doing. Obviously, 2021 stuff with the SEC. Then there was lawsuit stuff in 2024, which obviously got shut down very quickly. But he's a guy who's under very heavy scrutiny, and he's come out to call attention to stuff in the markets. If he keeps too high of a profile for too long, he he may attract too much attention to be able to accomplish what he's actually after. So I doubt this is the last we see of him. But it may be a while before we do see him again. Could be a couple years. Could be the next cycle. Who knows? It could be October 29th. He could come back for National Cat Day. Who knows? Hey, what's up, Noodles? Do I think this Powell event was also just a cover up for the IWM FTDs? I don't think those are going to be settled or cleared until basically the lead up to GameStop earnings. So if we go off of the Bernot formula, right? So we're used to seeing T plus 35, but the Bernot paper, the Mendel University paper on ETF FTDs is very important because the way that ETF FTDs work is different than just T plus 35. It's T plus 1, which is extended to T plus 6. The FTD is then set at T after T plus 6 happens. So that it's not recorded until T plus 6, but the fail is recorded on T once T plus 6 happens. However, then there is a C plus 35 calendar days, not trading days, from T plus 6. And then after 35 calendar days, settlement is T plus 1. But because it's an ETF, T plus 1 is a creation order. And authorized participants, if it's an authorized participant that's responsible for the fail, the authorized participant has 4 days over which to issue a creation order in order to resolve the obligation. So Richard, for example, would simplify this to T plus 33 because it roughly works out that way. But the actual formula is T plus 6, C plus 35, T plus 1 dash 4. So the IWM FTDs went back to July OPEX, July 18th. That T plus 6, C plus 35, T plus 4 period falls between September 1st and September 5th. So I don't think that was right now. That's my understanding of the situation. I could be wrong. Hey, sure. Yeah, so Sharon's asking about how to find price momentum oscillator. Yeah, so what you're going to do, so if you have a trading view, you'll find indicators. I think it's, yeah, so you'll go PMO. Oh, somebody even already put it up here. Ultimator's already got one too. See, people have already made it for you. I had to make this one myself. PMO plus daily SMA 55 by Jimbo San, and then the Kitty PMO by the Ultimator 5. So just go to indicators, search it, and then they've already got it there. Pretty cool. Great community, hey? Do you have any good sources for learning about the mechanics of options gamma hedging? Yes, I do. You want to go over to Spot Gamma. That is where you want to do your research on understanding gamma and options hedging. I would read and watch everything you absolutely can from Spot Gamma. I would go through the glossary first that I have here. This will teach you about key terms. It will teach you how this works. They do have their own surface. I used their surface back in the day, back in 2021. A bit. It is rather pricey, and it is aimed at, I would say it's much more useful for larger volume, primarily index options traders. That's largely, I think, who it's beneficial for, and that's who it's aimed at. The pricing on it is also aimed at that type of trader. So, guys who pull down a couple K a day, is basically like who this service is largely aimed at. If you'd like to go and become a large volume option, like index options trader, then maybe you'll find some added benefit to their service. They do have a good I haven't taken their courses, but they do have courses. I've learned a lot that I've learned just from consuming their free material and just like playing around with their tools back when I used their service in 2021. But that's definitely where you want to start. There's also a bunch of free stuff they have on YouTube, and they do like live Q&As and things like that. So that's who you want to check out. There you go. Close them or also go short, right? Sell covered calls now, enter puts. Yeah, obviously there are risks to that. As I said, for the same thing, I don't like to go long calls. I don't typically like to go long puts. It can work, right? I mean, I know some people in here even like did. I even considered it. I was really close to doing it. I noticed how inexpensive they were going into the last earnings. But lightning strikes twice. I get a little gun shy when it comes to be third time out. So I'll probably end up, if we don't get a clear sign that there's not going to be an offering, I might just go a little bit more aggressive with covered calls. Yeah, but maybe, who knows? Yeah, I don't know how you get $19. It's like prices aren't random. The price of the securities, it's not a random number. Like the minimums, why it has been $19 in the past and why it won't in the near future, unless somehow they're about to say that they lost $1 billion somehow, or $2 billion. I don't see how the share price goes back to $19. Or they'd have to offer, I don't know, they'd have to offer hundreds of millions of shares at like a bad price in order to move the stock down that much. Hey man, Jay Crispy's a cool name. Um, he didn't do any. He didn't do any after the quarter he did the share offerings. He hasn't, after the quarter that he said he wouldn't do share offerings. He hasn't done any actually since then. No shares have been offered since in quarter 3. He said he wouldn't do any more share offerings for the rest of the fiscal year. He didn't do that. And then after that, he still hasn't done any share offerings. He's done the 2 convertible bond offerings, but not any more offering. He didn't do the offerings in the period that he said he wouldn't do offerings. Yeah, that's interesting. I mean, it's been a little 10 time, right? All the 10's a little fun. Yeah, I don't know what's going on with Greg. The employment stuff, the TA team. Yeah, that was interesting. That whole, that stuff was very alive into the end of that last bit of the 2024 cycle, and then it all fell off a little bit, right? It just got quiet, right? It just got quiet. It just changed. right? Not that cool stuff hasn't stopped happening with the company, but it just changed. Oh, okay. Sharon's asking about how to read the PMO. Okay, sure. So basically, the way that I've used PMO is to look for crosses. Okay, so you can go across different time frames, but like the daily one is good, right? The daily one here is very useful. Roaring Kitty pointed this out to us, in that it'll tell you basically when we're going to go into our next cycles here, right? Okay, right now we are very close to a daily cross on the PMO here. We are very close. So what you want to look for, right, is you want to look for these kind of, when you see us kind of move up and then sort of flatline or kind of go sideways. If we move, you see the two lines here, right? You see these two lines cross, you see them go above the 0 line and above the 55 line, right? When you see that cross from below the 0 line, that's a bullish signal. That means you're going to begin a momentum cycle to the upside. All right. When you see it even out, and then you see the space between the 20 line and the 35 line narrow, and then you see that narrowing with the 55, you're coming to an end of the cycle, right? It can get extended. It got extended here. But really, if you're seeing some sort of technical pattern up here, that's probably a suggestion, okay, we're going to start to cross to the downside. And sure enough, once you get that, then you'll see a much bigger pattern, a much bigger down cycle unfold. And how do you know when a down cycle is coming to an end? Well, the two lower lines, the 20 and the 30, will start to round up. They'll start to move up before the 55 does. And then as they get close, right, you'll have an opportunity just before they cross to build out a position to sort of take profits off of the last sort of down cycle, change into your orientation on the up cycle. And then when you see the cross, okay, that's when we're going to charge out pretty hard. Okay, and then you get to the top. Now, exactly where the top is, hard to say, but you will see this kind of narrowing. In this case, we got the little surprise from the convertible bond, so we didn't have to go through a full down cycle. We just went straight down. But as you can see here, right, we're below the 0 line, below the 0 line, below the 0 line. The 55 is coming down. We're about to cross above the 55, and when we start moving, right, we'll move above the 55, means we'll start moving up. We may not go crazy volatile just yet, but then if we move past that, we move past the 0 line, then we're probably going to pick up steam and we'll move back into this area here, right? That might take a good 4 weeks to play out, something like this, right, before beginning of October. But we might start getting a little bit of recovery into this kind of middle area up here soon as this PMO cross unfolds. Probably, maybe even late next week, but we'll see how long that lasts. So that's what you want to look for. You want to look for the crosses. You want to look for the crosses, because if you see a cross coming up and you see, okay, well, price actually is pretty decent relative to when we're going to get this, then there's a good chance that you'll be able to get in front of a decent sized move to the upside, because the algorithms, they also see this stuff, and they also know traders look at this, so they fuel it as well. It's sort of self-reinforcing. Hopefully that's clear. Oh, I'm sorry. I did that thing again where I didn't show my chart. My bad. But I'll point this out again, right? Because I switch over and then I get into it, and then I'm like pointing out stuff here, and you get it. But you can see hopefully what I'm talking about here, right? So if we go back, right, move below the 0 line, right? This is the middle line here. Below the 0 line, look for the cross back up, right? It might stall a little bit, look for the stall. when it moves back. If it crosses, if you actually do get this cross, then the trend will really play out. Now, there may be some big, fast inciting event that forces the cross, in which case, you can't necessarily jump that. But like, how was I able, for example, to profit off of this down move? Okay, I missed this day. Like this day, I was not positioned to take advantage. I didn't have a bearish trade position to take advantage of this. But once this happened and we got this cross, it was like, oh, we're going down. Didn't think we'd do this bottom. I didn't think we'd quite get this bottom here, but I took profit. I did this to this, came out, and then sold this to this. Didn't do stuff here. Didn't profit off of this. But yeah, right. Once you can, even if you miss the cross, even if you don't anticipate the cross, you can still take advantage of the coming trend once you get the confirmation of the cross. Same thing actually in SPY, right? This works over in SPY. You remember back when I was in Thailand, like, how did I know that the market was going to do this? And I used to say, like, man, I should just trade SPY. Like, I made it my rule that I would only trade GameStop. That's still the only thing I do. But how did I know that it would do this? Because cross back here. And we also had a bearish cross on the weekly here. So this thing, right, like people, maybe, I guess part of this maybe was driven by tariffs or something. People blame this. Maybe it was just that people kind of got the idea, I guess it's late enough, right? Trump was talking about tariffs in here, and maybe it seemed like, okay, he's been elected, so there was a pump from the election, and then it was, okay, this tariff thing is going to happen. What do? This is an opportunity to do something with respect to that. So this was way before any of the tariffs actually, like, the plans got announced. Even before Trump was inaugurated, the market was already heading for a deep bearish cross here on the weekly. And so once that happened, I was like, oh, okay, like right in here, even though we were moving up, it was like, oh, it's going to go down. How far down? That's a different question. But it was going to go down, and down it went. Right? You see that cross, especially on those broader time frames. You can get the broader out the time frame, you see something like that happen. The clearer the idea, the more of an opportunity, let's say, you have to set something up to take advantage of that. But of course, you don't want to hop in too early. Use your discretion when doing that. But it's been pretty good recently. I'll say that. Cheers to Roaring Kitty for pointing that out to us. Yeah, that was very cool. Yep. Cohen's been great as far as calling out bottoms. I'll say that. I moved it back, dude. I showed you the chart. Hopefully that's easier to visualize now. I apologize for not showing the chart in the first place. Yeah, MTD. I was talking about Thomas trade there. It depends on when it goes to. It depends when it does that move. If it does that move today, yes. If it does that move in a month, still probably yes. But close. Depends how high IV gets. You have to watch the context. Like I said, I mean, right now probably is if you go in the money, you probably might be able to get something good. If you were to buy like now, or in the next week or so, I would say now going in the money is around the lowest risk time. If you're trying to play something you're trying to do earnings and you're trying to target, an October strike or a January strike to profit off of an earnings move, and your leverage is capped, you're doing like 2 or 3 or 4x leverage based on what you're picking up in terms of, say, like an in-the-money strike. If you're buying a 20, say for October, you know, that's a little bit more reasonable. That's like leveraging shares if you're doing a 20. Knowing what we know too about the fact that GameStop's probably not going below 2x cash as a minimum, which is right now around 22. It means that at expiry, that call is probably not going to be any less than $2. So it's not going to zero. But the 25, that's what makes me uneasy about the 25, right? Because a minimum value for GameStop does fall below $25. Now, the 25 might work, but I don't like to trade things that have the potential to be worth $0 at expiry. That's what I'd say. But that's me. Yeah, I mean, it depends. Here's what I gather Ryan Cohen's strategy is. Okay. Ryan Cohen did not want to be the CEO of GameStop. Ryan Cohen did his active sweat equity CEO thing once already. He did that with Chewy. He had that experience. He did not want to do it again. In fact, it's my understanding that this was actually a main issue in his personal life, right? In his recent divorce, that he promised his wife that he would not do the whole active CEO thing again. And basically he got in this position with GameStop, right? Where this is not his original idea with GameStop was to join the board, but not to be the CEO, not to be commander in chief of the company and to pilot the turnaround of the company. To help with it, sure. To have this be an investment that would pay off, sure. But to pilot the turnaround as head honcho doing everything, that was not his original plan in 2021. In 2022, I think it became very clear that there was nobody but him to do it. And so he was going to have to do it if he was going to rescue the company from the situation it was in. So 2023, he got to work. He started doing that. But Ryan Cohen has come out and said that what he would rather do is passive investing. Like, he's been asked point blank. They're like, oh, do you like the active thing? Or would you rather do Warren Buffett? And he's like, what do you mean? Put my money into various investments and just sit and let it work for me? Yes, I would rather do that. But, but this is not the world that I'm living in. What I think Ryan Cohen is doing is Ryan Cohen has made the core business profitable, together with all of this weird legacy swap market nonsense stuff in the background. I believe that he is using the company as a vehicle, both in its market dimensions and as a profit-earning enterprise, to generate as much starting capital as possible to then go and value invest and just Gameshire stop away the company. So my guess is that because GameStop is going into a 3-year macro earnings cycle, I mean, he's still doing stuff with the core business. It's not that he's abandoning that. It's not that he doesn't care about that. That does matter. And yes, if growth can be achieved, great. And I think there is a lot of potential with what's going on with PSA and Collectors Universe and tokenizing this market and being able to that whole project is worthwhile and it's a good endeavor. But I think what he's going to do is we'll continue to see a rising floor. It's going to be an appreciating investment, but he's going to squeeze every last dollar out of anybody who needs to escape from these legacy positions as possible. Maybe GameStop's going to end this period with, end the next 3 years with $20 billion in the bank. Maybe it'll have $40 billion. I don't know. How many times can you do this? They raised $8 billion in a year. Anything says they can't do that again. Anything says they can't do 4 this year, 5 the next year, 5 the next year, and then on the tail end there's a 3.5 event, and in 2027 we do Sneeze 3.0 December to January again, and then Cohen does a colossal offering at that point, and then raises another 10 billion for the company, and then GameStop's sitting on 40 billion, and meanwhile it's already, then the market crashes in 2027, and JD Vance is like campaigning for something, and Gavin Newsom is also campaigning, and I don't know, it's 2027, 2028, and then the market is bottomed, and then Ryan Cohen buys all the stocks. So is it going to be a Tesla slow squeeze? Is it going to be a real slow squeeze? But what's that going to look like? I'm not exactly sure, but I think he's probably going to do that. And so we'll see these ranges. And I think the way to think about GameStop is going to be in those periodized ranges. So this one, we'll see what the next peak is. But we already know the low is in, right? The low following the bonds was 21.54. The low after the bonds were raised was 21.92. Next time, do we go back to 21.92? Do we do 22.07? Like however much money they make this quarter? Do they do another offering? And then what's the next high? Is it going to be 35 again? Is it going to be 37 again? Is it going to go to 40? I don't know. But let's say we move up like 50 cents, something like that. If we move up like 50 cents or $1 or something off the bottom, like every kind of cycle, and we do 2.5 of those a year, then we're looking at a GameStop floor in 2027 of close to 30, which means do our up cycles go to like 45, the top end of that? Who knows? Bro, what do you mean 40? What do you mean no thanks 40 billion? If they have $40 billion in cash, then the market cap has to be at least that. Right? They can only offer 1 billion shares. So even if they go all the way down to 1 billion shares, if they go all the way up to 1 billion shares, cash per share is $4 per, and then you're doing a 2x cash basis, something like that. Why do you keep? What's your imagine the dilution. Like it's imaginable. It's good. It's an accretive offering. The share price goes up every time they do an offering. I would love to imagine the dilution. I am imagining the delusion right now. It's great. I want to see Ryan Cohen offer as many times as he possibly can. No, we've done this before. Money is good. Thank you, Algo Suave. I'm very happy. I'm very happy with $40 billion cash. I will take. I want to see these offerings. I want to see it take as long as possible. There's so much opportunity. Look, guys, right? Think of all the opportunities you have to sell cover calls. Like, it's amazing. Click button, get money. CEOs taking care of the fact that CEO is taking care of the fact that the company can't go bankrupt. CEO is taking care of the fact that if you just go to sleep for a whole cycle, you'll wake up at the other end of the next cycle and your shares will have appreciated. So yes, please, Ryan Cohen, offer to the nines. We'll see what happens. We'll see what happens this time around. But anyway, guys, this is it's great to see you all. Great to do questions once again. Great to spend time talking about our favorite stock. Going to be a good week coming up next week. Like I said, I think we got one more week. I mean, we are getting pretty close with that PMO there. So, but if we look at the option stuff, it does say probably one more week. One more week. I think that's what it looks like right now. We'll have to see what happens going into next week. Obviously, right, I start to get a little like, no, I want to. Do we get one more weekend? Do I get one more weekend where, calls get a little bit shellacked and some money comes out of there, can gunsling some of that stuff around, reposition stuff like that? We'll see. I think we get one more. We'll see what happens going into the week of September 5th, but getting exciting very soon. Yeah, we'll see what the outlook is on Monday once we get our data drop. But thank you guys for stopping in this weekend. Looking forward to seeing you beginning of next week. Have a great weekend, everybody, and we'll see you then. Take care, everybody.